Hey, I'm Dan Fitzpatrick here, stockmarketmentor.com, and let's get some hard facts on the software ETF here, the IGV. Okay, this is a weekly chart, and you can see how this thing has just been diving for a while. Like it really started here at this high in late November, in late October, and at one point this thing was down like almost 33%. So it's had a heck of a move lower, and you can see the volume from last week. Again, this is a weekly chart, so this is from Monday to Friday. Little gap up on Monday, and then just a real puke fest. So massive volume. Look and see how this was relative to basically everything else in the history of this ETF. You can see here on the daily chart, same thing, like this was really, really low volume, typically pretty low, started to pick up here. This part during the first part of the downdraft, and we get a little hiccup here, little upchuck right there. And then the big selling started, massive volume, huge climax, excuse me, huge climax here and then here. Same thing, like 90 million shares total on these 2 days. And now we're getting a move higher. I'm making this with an hour and 20 minutes to go in the trading day. And this is already heavier than average volume on the daily chart. So we caught this on Friday. Uh, pretty close to the bottom. I don't like to sit here and try to predict bottoms and just say, oh, okay, this has gone down enough. We're going to buy here. So this on Thursday would not have been the day. I'll have to admit it. Liars would tell you that they did. They bought it right at the low. I'm sure some people did. I just wasn't one of them. So on something like this, you see the oversold condition, you see the massive downdraft and a massive, huge spike in volume. This is like the most stubborn traders all capitulate at the same time and at the same price, and that was $80. And so waiting for that. And then you're waiting for Friday, typically on big moves, and you can take this to the bank, typically on big moves in a week. Friday is virtually always the reverse. It's always a snapback. You can call it a reversion to the mean. Um, I don't know about that. That's a fancy term for just saying like if stuff goes down for 4 days in a row, right about then, traders are going to be looking at it going, you know what? Shoot, man. Anything can happen over the weekend, so I think I'll just take my profits, cover my shorts, and I'm out of here. Or just liquidate your longs because you never know if this is going to go down further. That's just kind of a dynamic of trading. But when you see this kind of move, frankly, you still don't know if this was the bottom, these big skyscrapers notwithstanding. But it's a low risk trade to take a shot because let's say you buy right at the end of the day, you drag your cursor down to just below the prior day, that's Thursday's intraday low, you're risking at the most 4%. So you're risking 4% in and in return, you're getting the opportunity to get in really close to the bottom of an oversold bounce. And so that's where we are now. I have been looking for a pause here at the 8-day EMA. I'm still kind of looking at this as a trade, but what I will be doing is as this runs up, and I think we'll probably like the really smart money buys on the first day, semi-smart money buys on the second day. The not so smart money's probably going to be coming in tomorrow looking for this. That's not what I'm looking for. I'm looking for an opportunity to raise my stop so that I can get it like essentially kind of like up to this break even level because now I'm in a position where I'm not going to lose money on this trade. Like worst case, but I need to give it a little more room than that. But I'm not going to lose money on this trade because my worst case scenario is I'll be stopped out at break even. And guys, like that's how you want to be That's how you want to be trading. You always want to be thinking risk first. I talk about that all the time. Risk first. If you can manage your risk, the rewards will come as just as a function of, I mean, hell, you got to be right sometimes, right? So, anyway, as we look at the weekly chart, though, you really get a really good sense of what's going on. It was, it was about as predictable could be that you're gonna see some kind of rebound here. I mean, not exact, but you've seen it here, you've seen it here, you've seen it here, you've seen it here. A little stair step here at 80. So 80 was a really pretty good level. And the low last week was 79.27. So for a lot of different reasons, this is a good time to be buying this stock. Now, would I buy it? And I know it's an ETF, but it's a stock to me. Would I buy it now if I were you? Um, I think you got to just define your risk. If you're buying it here, I mean, you're later than we were, but that's okay. Um, so you're buying it here. I would drag my cursor down to below today's intraday low of 81.78. So you're buying it here. You're putting it at like 81.70 or something like that. That gives you a 4.25% risk to do what? Well, hopefully I hate to use hope as a strategy, but hopefully you'll get maybe 8% out of it just as a function of this kind of snapback. Okay, so that's all I got for you. If you are not a member of Stock Market Mentor, come on, man, check it out. We did a little over an hour training session today, walking through a lot of stocks, walking through the biggest beneficiaries and looking at the charts, but the biggest beneficiaries of the companies that are going to benefit from this massive capital expenditure or capex that these companies like Google and Microsoft and Amazon and Meta, that like they're all going to be spending just a crap load of money. And so we went through these companies that are going to be making bank on that. And so that's kind of the next, shall we say, the next gold rush there. So anyway, that's all I got for you. I will see you all next time.